Hello friends, welcome to my channel and thanks for watching this video. Friends, as we have ended with one more week on the Wall Street where the market has beaten with black and blue colors and they turned literally into black and blue, and it is very important. So it is every time very important, but this week after the market trashed like anything, it is very important to discuss what lies ahead and some of the things which I have been saying for the past 4 to 6 months has actually turned true. I'm not talking about recessionary fears and all that crap. I want to concentrate myself and my focus literally on the stock market, because we cannot compare stock market with the real economy. So the stock market is the real economy, and the real economy is completely different from the stock market. So let's deep dive into it and let us see what has happened in the last 1 week and what will probably happen in the week to come. But before that, if you haven't yet subscribed my channel yet, just hit on the subscription button, also hit on the notification bell along with the all button to get my updated video notification. Now this is what we can call the world with confusion. Why I am saying this: if you go back 2 years, simply 2 years, 700 or 800 days back, you will see a sink in the global policy across central banks, where they are giving swaps, tax cuts, interest rate cuts, quantitative easing. And now, because scenario is such crucial that US central bank is trying to save its own reputation by continuously increasing the interest rate hike, and this is quite a thing that we have to see, that if central bank does their own job, which is try to be audacious as long as possible, and because the statement has already came out that they want to be in the net, real interest, net positive real interest, which means that the interest rate will go up to somewhere in between 9 or 9 plus percent, and that is not practically possible right now in the current world. And there is no country in the world, or I would say developed country, I'm not talking about countries with problems here and there, or low to mid range countries, but the big countries right now, they can't sustain with 9 plus percent interest rate, bank interest rate. It's not practically possible. So let us see how long they can go. And this 2% interest rate, we don't know what will happen for that. Apart from that, yeah, Google CEO tells employees not to equate fun with money in heated all hands meeting. So this is just an important headline. You can probably go and check it out. Apart from that, British pound plunges, bond sink after government announces tax cuts. So when you are reeling with inflation, your bad I would say policies, and you are doing tax cuts, so it will pump up the inflation like anything. So these kind of blunders, just for the sake of doing short term benefit, can actually harm the country in a long term. So this is not good. This is basic economics. We all know. We need not to be an economist for that. We have seen this thing happening again and again across the globe, in the last 20, 30 or 40 years. In bad times, if you take bad decisions just to give the feel good factor, that is not actually help your economy in the long term, and most specifically your country will suffer. And when you're talking about British pound, it means you're talking about the UK, and you're not talking about the EU. So that's also another thing which one must keep this thing in the mind. Apart from that, yes, US government dishes out extensive tax cut as country braces for recession. So these kind of policies, it seems like there is a complete divisiveness of what The economist is thinking, what the government is thinking, and what your central bank is thinking. Apart from that, I don't want to read the stock market headline, because we are anyways going to analyze the overall price action which has happened in the stock market. So let us see. Yeah, treasury is something which we are going to analyze, and I've been talking about it for the last 2 months specifically, that things are not looking good as far as the treasury is concerned. So I think this is it, most of it. So let's go to the market and let us see. So the market, so if you are looking at the Friday's close, which is not at all good, Dow Jones closed minus 486 point, Nasdaq minus 198 point, S&P 500 minus 64 point. Then gold has fallen down. Now this seems 1650. It has I'm talking about the range of 1650 and 1670. Now it is somewhere at the lowest end of the range, but if things goes below 1650, then this is not good for gold. Oil, now you can see 79, and this is not because everybody is pumping oil. This is because central bank are now literally crushing the demand, which you can see. Okay, so this is not good as far as the trend is concerned. Okay, this is not at all good as far as the trend is concerned. So we have to see what is going on as far as the trend, or as far as the range is concerned going forward. Apart from that, the VIX has already started moving higher, and above 26 or 27, or let's say 25, it is not good. It means the volatility has already increased, and it is now very near to 30. 29.92, it is actually 30. And then yes, this thing what I have been talking about is, I'm just looking or focusing on, there are lots of things which are happening, but I'm just focusing on the 3-month and the 30-year. And once 3-month moves beyond 30-year, once the interest rate for 3-month yield goes higher compared to 30-year, it is, then you will see big problem, or the market has already started factoring in. Market will not wait for things to happen. It has probably started factoring in. But what is clear is, if you are looking at if you exclude 30 months, 3 months, and if you look at 30 years, compared to 30 years, the 1 year, 2 year, 5 year and 10 year, everything is higher, which means, and most specifically the 1 year yield and the 2 year yield, it is indicating that for the next 2 years right now, okay, it will change on daily basis, but right now it is indicating that things looks uncertain for the next 2 years. Let us see, because there are big trading moves or trading positions people have taken in each and every segment of the stock market. Because 10 years back we can say that some of the segments may not be manipulative, but right now everywhere you have trading positions, so we can't say right now for sure. And right now you have to focus on 3 months, 30 years and 1 year and 2 year, which is indicating that uncertainty or uncertainties will be there on 1 to 2 year basis. Now the biggest culprit is the dollar index, and you can go and check out my videos for the last 6 or even 1 year, and I keep on saying that dollar index will go towards 190, in between 119 and 122, and that's what the indications are. The close was 113 and it is literally moved like a stock. Okay, a currency and the global currency, if it moves like any equity market stock, then this is not at all good. Okay, or any equity index. And I have been saying it again and again that these kind of moves will not only crumble the global market, but it is not at all good for the US market as well. And we can see these things, and literally when your currency is so strong, generally it means that your economy is strong and your stock market is strong. But right now you will face the heat, or you will definitely keeping yourself on risk, because let us just understand one thing very clearly. Okay, when it was trading in between or above 110, or in between 119 and 121, that was the time of 2000, 2001 and 2002. And it's been like the same levels are getting retested after 22 years. Okay, and in these 22 years, if you exclude, or if you divide the stock market, so with this line, okay, if you divide, why I am dividing it, because after this line, after this line the QE has started. So you have your bunch of tons and tons of money that are right now floating in the market, and with this strong currency, they are, and the kind of loans you have given in the last 10 or 12 years with literally zero interest rate, you cannot sustain, your market cannot sustain with when Fed is talking about the net positive interest rate. So it sounds very positive, but in a real world, whether it will work or not, because you have taken interest rate at 0%, and now if you have to pay 9% interest rate on that, so that's quite a thing. So it literally means that things will not sustain for long. That's the first thing. And these kind of moves in currency is it's literally unimaginable, because when currency moves like any equity index or stock, it means uh, things or trading positions are building up or piling up like anything, with the kind of money flowing into the market. So one need to be very cautious, and this is probably the sink in factor for the market. And there is no doubt right now that it will definitely retest the highs of 2002, 2000, 2001 and 2002, which is in between 119 and 121. Hopefully this was the beg your pardon, this hopefully this range will be the deadline or the biggest resistance as far as the upper end of the range is concerned. Okay, and everybody should wish and pray for that, because if it moves further towards the highs of 1984, 150 or 160 DXY, then stock market will go anywhere. Literally, stock market will go anywhere, and somebody will thrown out from their job. Okay, whether on government level or on central bank level. That's something outlandish right now, so we don't factor in these kind of things as of now. But if you are looking at the swing, and if it is a stock, because this is a currency, we have to do lots of permutation and combination before saying something. Otherwise, if this is a stock, the general tendency will be after 20 years the stock is making a double bottom kind of pattern, and next move will be something like this. This will literally be the case everybody or most of the people were thinking about. But because this is a currency, so we have to do lots of back-ended thinking before saying something or analyzing this kind of trend. Okay, so I have taken a bit more time because I need to, or I have to explain it to all of you, to my valuable listeners who are listening, and they must understand the seriousness of the current situation. Okay, now gold futures, I've been talking about gold futures, and gold futures right now has literally broken, and thanks to US dollar the range has broken down, and this is the price chart of gold future. It has been a good accumulation zone in between 1670 and $1700, but below, here we are, so you can clearly see a breakdown. So below 1677, it's literally a breakdown, And now the two important support levels we have in the future, it will be 1446 and then we have 1300 on the downside. So these are the next two big levels, or your 100 and 200 day moving average, simple moving average in the monthly chart. So these are the two specific levels that we are going to look at. Or otherwise, if you want to look at the overall range, it is like $1,050 on the downside and you have nearly $1,900 or $2,000 on the upside. So this is the basic range. But let's see, if it falls further below 1300, obviously it will retest 1,050 on the downside. Now let's go and check out the most volatile index, and that is Nasdaq Composite. Nasdaq Composite right now has taken a respite just above the, so this is the monthly chart, just above the 50-day moving average. So this is the monthly chart and it has just taken support. But is this the end of the story or not? That's a very big thing, or very big statement to be made, because if it falls below the 50-day moving average, obviously the next support will be the 100-day moving average. This is the monthly chart and it is somewhere in between 8,200 and 8,300 right now. If you want to go for 200-day moving average, that's fine for you, but this kind of moves are not normal, and we cannot go beyond a range. Okay, we can create our own fantasy, but things has to must look logical. So going forward, we have to see, this is the monthly chart I'm talking about for Nasdaq. As you can see in the weekly chart, the 200-day moving average has already been broken down. That's why I'm referring the monthly chart, where you can see Nasdaq is holding above the 50-day moving average. But if it falls below this, then it will definitely go towards 100-day moving average. So be aware about it. As far as SPX, people talk to me about SPX. You can probably get this is the combination, nothing but the combination of Dow Jones and Nasdaq. But yes, because this is average and you have literally 510 stocks in this particular indices, so the range or the trend is very clear. Okay, if you are looking at, or if you are analyzing SPX, the range compared to Dow Jones, and I'm not saying that Dow Jones and Nasdaq is not clear, but the average impact you can clearly see as far as the trend or the market is concerned. So if you are looking at S&P 500, what you can see as your next support is 2,900. So possibilities are now opened up for the downside, which is not good for the market. But when currency is strong and it is moving like an index or stock, obviously we can't do anything beyond a certain point. And one more important thing, which I may say last but not the least, okay, which we need to talk about, is the volatility index. And you can clearly see the volatility index has already started rising again, and this is not good. Okay, this is literally not good as far as any indication is concerned. So above, as you can see, above 28, this is the line which you may consider as the danger zone. So 28.2, if it continues to sustain above that, this is not good, because on an average, then the next movement in the VIX will push it towards 47. Actually there are two levels to be looked at, and they will be 40 and 47. So this is not good. We are trading at 29.9, which means nearly 30. So if it moves toward 40 and 47, obviously this is not at all good, which means it indicates volatility going forward. So as I told you, I'm saying it again, beware. Now when I'm saying beware, there is a silver lining which is always there, which means if you are a long term investor, you will definitely getting stock at a big discount compared to a year and a half or 2 years back. Okay, so use the opportunity to accumulate good stock for the next couple of years, because you are getting a situation because of which stocks are falling. You will never get a good stock at a discount price when the stock market moves higher. So this is the normal thing which happens time and time again. When the stock market goes up, you are not at all interested to buy. You will think that if stock market will go down or if the price correct, I will buy. And when the price started correcting, you will find out reasons not to buy. So that's not the correct way. You are getting discount in terms of price correction. If you think stocks are good, reasons will follow the soon. But if you don't decide your way, then you are going to lose money continuously in the stock market. So with this positive note, I want to close this session. So this is the end of the video. Thanks for watching.